Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, so let's take a look again on the gold market. You can see market yesterday mostly has completed our suggestion that this probably downside action should continue, and the overall performance that we see here on the daily chart, it doesn't look bullish. So the sell-offs stands relatively strong, and this is not the way of the performance that you would like to see on the slope of the right arm. Potentially, of course, you could recognize here something like falling wedge, which is, from the classical point of view, should be bullish, theoretically. That usually indicates the enhancing of the bearish power. But, well, in current circumstances, I wouldn't rely on it too much, because in general, the overall market performance here, it is not bullish. And it's not the way how you would like to see market performed at the point where it should show the upward reversal. Currently, a lot of markets coming to the major targets. So it's dollar index, euro currency, they are coming to the very strong levels that should trigger some reaction in opposite direction. Gold, as it also stands in relation to United States dollar, probably also could get some reaction here. That's why maybe currently it's a bit too early to say that market will take it out of the 1685, because all these markets are trading in relation to the dollar, and if on the dollar index on the euro currency will get the reaction, mostly it also will be triggered by the dollar. On the gold, hardly it will go absolutely in opposite direction. So here's also maybe some reaction will happen. But currently, I think that we could focus on the nearest standing target and then see what will happen. So nearest standing target, as you know, is our intraday XOP. This market theoretically should reach as we suggest. So on the 4-time frame chart, take a look at what we have. Breakout has happened of the flag that we discussed recently, very nice. Market just barely hasn't reached the XOP at 1720 and now stands in upward pullback. The major 600 level is already broken, as you can see, with this drop. On the 4-hour time frame chart, the nearest term, it makes sense to consider and watching for a possible bearish grabber that could appear. If we will get it, that will tell you that market is going directly to the 1720 at least. So maybe even stronger action will happen. Technical picture on the daily chart doesn't contradict it or even suggest that maybe we'll get some straightforward acceleration. Sometimes it happens on the wedges. So if market wedge can't trigger the reversal, usually the collapse of the wedge and failure of the wedge trends very fast and strong, so market just breaking down and shows the acceleration here. So we will see, because as dollar index as euro currency still has the potential to drop more, and as gold shows a bit stronger action recently to the downside, maybe it also will be stronger. Anyway, currently we're not considering taking the long position by far, and trying to find the scenario that we could use for a short entry. Because here on the 4-time frame chart, keep an eye on the grabber. It might be forming here. On the lower time frame here, we could get the classical type of retracement. So previously we've got a triple to sell after the drop. We could get another one if market was strong enough to reach this level in general. So to complete this A, B, C bottom OP, and agrees perfectly with the 1748, 1750 area. So if market will climb there, you could consider taking the position somewhere around 1745 based on the 3 drive with the stops above the confluence. That will be enough to position yourself for the downside action. So in general, you can see that here we see much slower CD leg than the AB, which means that the OP, if market really will reach it, which maybe not happen if it will be weak enough and start dropping immediately. Anyway, if market will able to reach it, this probably will be reversal rather than just minor retracement. This usually happens when we have the slowdown with the ABC direction. Besides, guys, we'll take a look at the interest rates performance on the 10-year yield. let's take a look what's going on. The market shows real strong and fast acceleration. And the reason why market wasn't able to reach the XOP in 162 is just combination of the fib level and the overbought, which is actually bearish stretch pattern that market meets currently on the daily chart. And you can see it's triggering some reaction now, some minor pullback, which lets gold to stay on the surface as well. But once the reaction will be over, maybe after some pullback here, XOP will be reached, because when you have the acceleration above the OP with this speed and power, it's almost impossible that market will just ignore the XOP and won't reach it. So reaching of the XOP at 1618 really has the big chances. Correspondingly, since on gold we also have the XOP, reaching of the XOP at 1720 here also stands very significant. Even more, gold could show even stronger reaction to the downside. So that being said, currently we're not considering taking long position, despite that we have some hint on the possible wedge here or something of that sort, because overall pattern looks very weak. But we are focusing on possible bearish context, bearish scenario, and if we will get lucky and market will appear around 1745, it's actually the point where you could think about taking the short position for target at least on the 1720.